This program is brought to you in part by the Eugenie and Joseph Jones Family Foundation, a local foundation proud to support education, the arts, and culture in the greater New Orleans area. Informed Sources is made possible in part by Susie and Pierre G. Villery.
Quiet on the set. Soon we will all be more informed.
We appreciate learning more of our region's news and public affairs. Cameras rolling.
Hello, I'm Marcia Kavanaugh. Thanks so much for joining us. Well, insurance is supposed to be something that provides security. Increasingly, it is also a source of concern, with rising costs creating uncertainty about our homes, businesses, health, even what we drive. Our entire show this week is focused on the industry, its future, and even its politics. Joining us are tonight's Informed Sources, Errol Laborde, producer of Informed Sources, Stephanie Riegel, staff writer of the Times-Picayune, the New Orleans Advocate, Don Ostrom, Channel 12's Future Watch reporter, and Gordon Russell, managing editor for investigations, the Times-Picayune, the New Orleans Advocate. Go over to E first because, oh goodness, I mean, insurance. It's on everybody's mind right now, and everybody's worried about it and concerned. It's hitting us in the pocketbooks. So you wanted to talk about sort of the regulations for it, and
well, just about every topic
laws.
We talk about, we'll talk about it, and in the end somebody's going to say, well, we need some laws, we need some rules. And so the question is the regulations, who the regulators are, because that's the whole key to the thing. I mean, at what number do you set various rates and things? States traditionally have, a position called an insurance commissioner. Louisiana has had since 1957. We've had 8 of them. By the way, 3 of them went to jail. And they've all been elected. But some of them have been good. I mean, they did some good things and all that. But one of those commissioners, Jim Brown, I was talking to, and he was commissioner for 2 terms. He was elected. He'd also been a Secretary of State, so he knows about elections. And he argues that insurance commissioners shouldn't be elected. That the governor has to have the power as far as regulating insurance, and so that they should be appointed by the governor. And so when there's a problem, the governor can't say, well, don't blame me, blame the insurance commission, that they have to be answerable. And in the United States, there are 11 elected insurance commissioners, meaning there are 39 who are not, who are appointed by the governor. So anyway, that's just a little subtle thing that we just might need to think about if we look at it in the future. We have a brand new insurance commissioner, a guy named Tim Temple, who was elected really, he had one opponent and his one opponent dropped out, so it was a dream election, but he had a good reputation in the insurance industry. He's so new on the job, we can't really comment good or bad, but his reputation, I think, is a good one. But he's been through this first legislative session. And Gordon, I'd be curious about your observations about how the legislature did the first time around under the new administrations.
Yeah, I mean, Tim Temple has espoused, a very pro-market. That's his philosophy. Is he wants to bring insurance companies back to Louisiana. They've been avoiding Louisiana like the plague for years, and the insurance companies that have come here have often been poorly capitalized and prone to failure, which is one reason for our current problems. So he proposed a lot of pro-industry measures, and largely those things passed. The biggest things that passed were they got rid of the 3-year rule, which is a sort of unique to Louisiana law that requires your insurance company to keep you on for 3 years. Or once you've been on for 3 years, they can't drop you.
Yeah.
And that is unpopular among insurance companies, and that's no longer the law. And there's some changes in terms of how often, how much approval insurance companies need to jack up your rates and that sort of thing, which has always been pretty heavily regulated. That's something else insurance companies wanted. Probably the biggest pro-consumer thing that they did this session, which was not something Tim Temple wanted to do, but there was sort of populist pressure to do it, was to get rid of the surcharge paid by customers of Louisiana Citizens, which is the state-run insurer of last resort. And by law, they pay 10% above market rates, and starting next year, that 10% surcharge is going to go away.
But what never did happen is that back early, when he was a candidate, even when he was elected by default, he says, "I want to have a special session. I'm going to call the governor. I'm going to call the legislature. I want to have a special session." The special session never happened.
Right, everything was done. I mean, Jeff Landry was more concerned with doing a special session on crime, and he was focused on this constitutional convention, and the special session on insurance didn't happen. But there was a number of insurance bills taken up in the regular session. But like I said, mostly these kind of industry-friendly bills. And Tim Temple says that eventually this will mean more insurance companies doing business in Louisiana, which will eventually bring our rates down. It's
kind of like trickle-down economics when it goes to work, right? But I mean, it's a philosophical thing like that. There's absolutely no reason to think it'll really work,
right.
especially when the risk is so.
Well, it's not going to have any immediate effect, that's for sure. It's
It
going
will
to take
take
some time.
years.
And it's a difficult problem, to be fair to Temple. I mean, I don't disagree with Stephanie's characterization. I mean, the real problem is this is a lousy place to write insurance because we have a lot of risk. And so it's a challenge. There's a reason that insurance companies aren't flocking here.
Right. Well, also like Florida has really had a problem too.
Yeah.
And
Yeah.
something that they've had to deal with. How are they doing in dealing with it? A little bit easier than us, do you think, or better?
I think they're having a lot of problems too, and maybe they're maybe not quite the problems.
Texas has been able to handle it a little bit better, but Louisiana and Florida are at
having
the
a hard
top of the list of having a hard time dealing with it. And part of our problem in our state is all the litigation that happens surrounding insurance, and some maybe necessary tort reform. That's another thing that it would be years in the making to see it change. But in just one quarter, for instance, of 2020, $12.4 million was spent on advertisements in the state of Louisiana for insurance lawsuits. Advertising for, you get in a wreck, get a check. I hate to pick on one person, but that kind of advertising that encourages you to file suit after either an insurance claim on your house or a car wreck, it contributes to rising costs.
I was curious why Mississippi had lower rates than Louisiana historically, and I asked somebody, and he says it's because Louisiana has more exposure. We've got-
Mississippi has much smaller coastline
Yeah,
than
we
we
got
do.
the whole Gulf Coast. Yeah.
I think they have 300,000 people near the coast, and we have
Most
2
of our
million.
population.
Yeah.
And then after the coast, they got the bayous and everything else, and then Mississippi's largest city is up in the north, and ours largest city is
Right on the river.
Yeah.
So like you said, Gordon, I mean, the real issue is risk.
Yeah.
It's risky here. No, there's no doubt about it.
And you keep hearing when you talk to real estate people that like the reinsurance market is so soured on this area because of the risk. And so what I ask people all the time is, but what does that really mean? I mean, does Lloyd's of London run out of money at some point? What
The
happens?
insurance companies insure themselves,
Right.
and nobody wants to buy their policies
So
and
this
cover
is
their
more of
policies.
this is a national or global problem.
Yeah.
Right.
And I mean, obviously, hurricanes create a special kind of risk because, unlike normal insurance, you're worried about a house burning down or something, but you're talking about entire cities being leveled.
Right, exactly. Okay, let's talk about water.
Yeah.
As Ed pointed out, we have rivers, bayous, we have the Gulf not terribly far from us, the lake. Flood insurance is really, really important, but it's gone up a lot too.
Yeah, I mean, Louisiana, as you all probably know, is the most heavy user of the National Flood Insurance Program in the country. I think our rate of people using flood insurance is like at least twice the national rate. It's the highest in the country. And controversially, they implemented this program called Risk Rating 2.0 a couple of years ago, which is supposed to get everybody's rate to an actuarially sound rate, which it hasn't been forever. And it's been a subsidized program where the payouts exceed the premiums by about double, I think, on an average year. And so they're trying to true that up, and we're paying the price. We're paying the price especially hard because so many of us depend on flood insurance. And so it's phased in, maximum of 18% increase in any single year, but a lot of people are they're going to see increases. The average, I think I wrote down, was 134% for Louisiana. And so that would mean 18% increases every year for, say, 8 years or so. And some people in Plaquemine Parish are going up over 1,000%, which is going to take decades to.
And so we did hear, from our delegation, congressional delegation, we're going to fight this, and the business people, business leaders. Any movement on that?
I mean, I think it's been large. The stuff in Congress has been very unsuccessful, as far as I can tell. They've tried to shame FEMA into more transparency around the program, but to little avail. And it's really very difficult to understand how the new rates are calculated. They've told us what some of the risk factors are. It's things like proximity to water, and I actually don't remember all. There's 4 or 5 factors, but. It's really hard to, there's no transparency to the rates, and so there's not like the old days where you could look at a flood map and say, okay, this is what everybody's paying. So there is a lawsuit that's still pending. Louisiana is part of that lawsuit and has won a couple of rounds allowing the lawsuit to continue. They haven't won a judgment or a ruling of any kind, and that is sort of trying to delay or trying to blunt the impact of risk rating 2.0. So that's something that could still happen, but...
Oh boy, we are the bearer of bad news for everybody right now, I know, because it's just going to continue as I go over to Dawn.
Yeah.
We're hearing, homeowner insurance rates, we're talking about the insurance companies, not wanting to come here because of the risk, or they go here and they decided to leave. Homeowners are really, really bearing the burden here.
Well, full disclosure, I wear 2 hats. I'm a journalist. I'm also a realtor working actively in commercial and residential real estate here. And we see there's no way to get the hard numbers of how many deals are getting ruined by lack of insurance, because you don't get to a point where anybody can quantify it. I talked to a couple title attorneys, and they know they've seen files get opened that don't end up going to closing. And that's as people are gathering their numbers and finding out just how expensive it is and realizing, well, I can afford the note, I can afford the taxes, I can afford the upkeep. Oh, but I had no idea insurance was going to cost me $8,000 to $12,000 a year. Yeah. We've also heard stories of people who own their homes outright and planned to stay throughout their retirement and figured out what their monthly budget is. And well, when your insurance increases by 25% or 50% or 100% in some cases, you can no longer afford the home you're in. LSU surveyed last year and found that 17% of Louisiana homeowners were dropped. Their policies were just canceled. I'm one of those people. I was a victim of the 3-year law. I was in for less than 2 and no claims, and they said, nope, we're leaving. Good luck. 63% of policyholders in the state said they had coverage increases. We are, according to the Insurance Information Institute, Louisiana is the least affordable state in the entire country for both homeowners and auto insurance. Some of that is risk, some of it is because of lawsuits that happen. It's not a sustainable thing, and there's not really a good solution in place yet. First-time homeowners can't afford to buy because they can't afford the cost of insurance. So lenders are trying to figure out how to roll that cost of insurance into the loan process to see if that's a solution. Everybody's got to kind of get on board, because if you can't afford to stay in your house if you own it. You can't afford to buy a house if you don't own it. The people who do own and rent out have to raise their rents because their expenses have now gone up.
And this is one of the big factors that's chilling activity on your side of the market, just buying and selling homes, right? I mean, that's why nothing's
correct.
happening.
Home sales year to year from May to May, I could only look at May to May, I couldn't look at June yet, are down more than 4% in the MLS, in the system that right here
and
in
they
this
were
market.
way down last year over
and
the
they
year
were down
before, too.
So we're down more for 2 years. You know, you hear about sales being like this around the nation. That is not the case in this market at all. And it's not just, people have come to grips with the fact that interest rates aren't going down, and they're willing to pay that 7% or 8% mortgage depending on where they are, but the insurance rates are really killing.
That's what's really stopping the sales.
It's really stopping the sales.
And on the commercial side, it's even worse.
It's even
really.
worse.
Except, I guess it's spread out over more people or more tenants or whatever, but it's affecting everything.
And we're just hearing more and more, too, of people who don't have to buy homeowners insurance because they don't owe anything to the bank. They own their homes outright. They're choosing not to insure.
To forgo
self-insure.
Well, and to self-insure, it kind of, if you're going to spend $12,000 or $18,000 a year on insurance and maybe get nothing back, and you can put that $12,000 or $18,000 in the market and earn 6 or 7% on it and do the same thing next year and the same thing next year, it probably makes financially a whole lot more sense for individuals instead of paying it to the insurance
I
company.
mean, we didn't even talk about deductibles, but with 5% deductibles, if a hurricane blows your roof off, that may just be your problem, even if you have
Right.
an insurance policy.
Well, yeah, and or you don't get to the point of getting to that deductible.
Exactly.
So you just
Yeah.
have to pay it out of pocket after you've paid that giant premium.
Right.
You're still not really covered.
The thing I think is an important point too, Gordon, you mentioned if we get hit by a hurricane, if anybody on the Gulf Coast this season gets hit by a hurricane, we're all in the same boat because the market in general just sees that risk as huge, and we're all going to suffer for it. I mean, it's going to impact us if Florida gets hit or Texas.
Here's one, let me read. There were a record 28 weather and climate disasters with losses totaling over $1 billion last year. That's each disaster with losses totaling $1 billion. By comparison, between 1980 and 2023, there were 8.5 of those events each in a year. So we've gone from 8.5 in a year to 28 in a year. And the insurance, we sit here and it sounds like bad insurance company. They don't have that reinsurance pool. They've got to build it back up. They can't afford to insure all of us for less than what they're charging us necessarily.
Because bottom
and
line, they
still
are
function.
a business, and they're in there to make
They got to
money
pay
as much
their
as it hurts
employees
us.
too.
Yeah, right, exactly. All right, so we've talked about our homes, we've talked about flood. What about our health insurance here?
Well, I'm sorry to say that I don't have really great news there either.
Thanks.
Health insurance continues to go up. Talking to brokers, the average premium increases they're seeing this year as they're starting to negotiate contracts with employers who really pay for most of our health insurance have gone up like 8 to 12% on average, and that's on top of last year. It was the same sort of thing. This has been happening every year. I guess compared to a 1,100% increase or something, it's not that bad. But it is really a problem, and the drivers are just huge cost of health care and drug prices, which are really, really a big part of it. And look, there have been wonderful, developments in recent years with some of these drugs for diabetes and for cancer care that can just do remarkable things in terms of extending life and improving health outcomes in other areas. But the cost of something like Ozempic might be $1,200 a month. So if you're an employer and you've got a couple of people in your company or more, and you're picking up the tab for that, that's huge. And so then you have these pharmacy benefits managers, which is a relatively new invention that is supposed to be a middleman to sort of broker better deals for an employer or, and for the drug companies. And new information that's come out even just as recently as a New York Times report last week showed that they're really in on price fixing in a lot of instances and are making the problem worse. A lot of the solutions that have been come up with that have evolved over the past couple of decades to address this problem that's really been going on for a long time now have created other problems. And in Louisiana, same thing as with our exposure on the property and flood side, we have a very large low-income population, and it's very unhealthy. Something like 40% of our population is on Medicare, 60%. And so we really have the worst health outcomes in the country, and so that costs more to insure. And Medicaid only pays hospitals, for instance, 80% on average of their cost. Medicare's about 1-to-1. That means that employers are going to have to pay 1.5 times just to make up the difference. And us, who are paying our share of those premiums, get hit harder.
Well, what about Blue Cross here? It's still a major.
So the Blue Cross deal was really, really interesting, and they insure the lion's share of people in Louisiana. Something like nearly 2 million of Louisiana's 4 million people have some sort of Blue Cross insurance. And earlier this year, their efforts to sell to one of the large national companies, Elevance, fell through. There was just so much pushback and concern over it. So in the months since then, their CEO has left, and they have a new CEO now. They launched a major sort of marketing and advertising campaign to kind of rebuild trust and say, we're here for the long haul. But the effort behind their attempts to sell to Elevance were really to try to come up with ways to address some of these problems, because long term, they can't afford to continue to write insurance in this state. And so I think they're still working towards solutions, and I think you're going to see partnerships with some of these specialty pharmacies or pharmacy benefits managers or farming out portions of their business to other insurers, because that's the only way they're going to be able to compete. But it's sort of interesting because it feels like a long, long time ago. It was 6 months ago. But the deal kind of fell apart, and we didn't hear anything more about it, and that's it.
And so they say they're here for the long haul.
They say they're here for the long haul.
No deal in the works or anything
No
like that?
deal in the works anymore. So that kind of died.
Okay. All right, Gordon, maybe one possible solution, at least this is what our insurance commissioner, points toward, is aside from, attracting insurance companies here and increasing the competition, but it's the Fortified Roofs program that the state has come up with a limited pool of money, and we're finding out more and more it's not really working as well as they had hoped.
Yeah, I mean, it's had some hiccups. We reported recently that they gave away 3,000 grants and in the first year, and they're $10,000 grants for each homeowner, which is, theoretically supposed to cover the cost of putting in your fortified roof. We reported that 600 of those people, so 20%, were not able to do the fortified roof. And the biggest reason, I think, is because the money doesn't cover the cost of a lot of roofs. Not that the state promises that it will, but people get into this and they realize it's going to cost $20,000 or $25,000 to do the roof. Fortified, by the way, is a stronger standard that's supposed to keep the roof in place after a hurricane, hopefully, and keep it from leaking and doing other damage to your house. So yeah, it's more expensive than people realize, and then a lot of people just drop out when they realize this grant isn't going to cover it. Now there's some other things, like if you have a condo and you share a roof, that could make you ineligible. There's a lot of kind of very specific criteria that have to be met in order to do this program and get it certified.
And also, in order to perhaps get this grant, you have to first go through an inspection, and people are finding out too, with some of the older homes particularly, that these roofs couldn't be. Right. Because of the way the house is built,
right.
It would take
If your rafters are too far apart,
yeah.
There's a lot of little sort of, I would say picky things, but they're there for a reason. But yeah, you have to meet all these criteria in order to do it.
And it's helpful, but it only saves you about $1,000 a year on your insurance premium. It's not like it's saving you your entire insurance premium.
And there's no guarantee of what they'll save you. In Alabama, which pioneered this program, they have a requirement of, that the insurance companies have to give a specific discount, which, again, here we're taking more of a free market approach. The idea is that if it's going to really help, insurance companies will give you the discount you deserve, but I guess we'll see about that. Something else I was going to mention is, we probably need to talk more in Louisiana about other things that we should be doing to make, the real way to address this theoretically is to have our houses be more resilient. And we could do more with building codes, whether it's roofs or...
Except so much of our housing stock, the problem here, so much of it is historic, and that's why people love New Orleans, and we don't knock things down, and we reuse what we already have, and it's really hard to retrofit a house to current standards.
But there are some things you can do. If you're putting on a new roof, you can make it strong. There are things that can be done. We also probably shouldn't, we're still building slab-on-grade houses and stuff, and that's probably not a great idea here.
Should be elevated. So, but back to the fortified roofs. There is money there, right? And the program is ongoing right now?
I believe that they've exhausted this. There may be another round coming. I can't remember. They did appropriate some more money in this session, I believe. But there's sort of a lottery system, and it's not that easy to get one of these grants.
So basically, you need to talk to your insurance company, I guess, also to figure out what you could do to lower your premium in terms of fortifying your house in some sort of way, making it more resistant.
Yeah, and we've written about some people who go to, sort of extra lengths, and I guess if you work with your insurance agent, you can, there are other things you can do, and you probably want to find out what the discounts will be before you spend the money, but there are other building practices that can
just
help.
Other roads to pursue. And speaking of roads, you wanted to talk about automobile insurance, because that's another thing that we pay a lot for here in this state.
Yeah, and among the reasons, well, first of all, nationwide, that the cost of automobile repairs is spiraling. So that's not our fault. That's already there. Other thing, the cost of repairs for injuries after an accident are just far more expensive, than just a normal breakdown that you might have. And the third thing is that people are opting for more and more expensive vehicles. You know, the big vans, the SUVs with all the bells and whistles and things to them. And so that's expensive too. I'm concerned, and maybe it's just me, when you see all the commercials for personal injury attorneys, that to me seems like a bad sign, okay? I mean, the more of these, I mean, they got a lot of people making a lot of money off of other people's injuries. And I know one thing that people will say, you know, and this goes back to where we started about the regulations and who makes the laws and how much damages judges can award and all that. But I think that's going to be a big issue in New Orleans because there's a lot of that that's going on now.
Oh, yeah.
Well, I mean, it's been a big issue certainly in the legislature for years and years and years, and the governor just vetoed a piece of legislation that was aimed toward
tort reform.
tort reform and sort of maybe lowering some of these awards that are given out, which impact what we pay for auto insurance.
It was a pretty controversial veto that got him a lot of flack with conservative constituencies that he's generally pretty popular with.
Right, and so it was kind of surprising. But
yeah, I mean, there was talk that he had support from trial lawyers as well, and that seemed like sort of he was upholding a promise he'd made to them. But yeah.
So around this table, we've been talking for this half an hour now about really, you know, it sounds so hopeless. Is it? Do you think? I mean, you know, are we going to be getting any kind of relief? Who's going to speculate on that? Nobody.
I'd like to believe that capitalism will work. I really would. But I don't know that it can work fast enough. I think competition is healthy, and when there is competition, rates do go down across the board for almost anything. But, you know, that's why CVS and Walgreens always set up across the street from each other and compete on prices, because it drives more business to both of them. So if there are more insurance carriers representing all of us, we could have access to better insurance. And, well, I'm not going to like your price. I'm going to the guy across the street. I don't like your price. I'm going to try that guy on the corner. But I don't think that can happen soon enough, and it's doing too much damage to us in the meantime. You know, there are people who... I have several clients right now. I'm moving to Mississippi. I'm moving here. I'm saving. My car insurance is going down half. My homeowners insurance is going down 75% to move out of state. So it's a problem.
Yeah.
Well, I'll say to the extent that government can provide political relief, and maybe it can, at least it seems like there are some pieces together in the right place. We have a governor who's not shy about using power and appointing people and doing things. We have a new insurance commissioner. As we said, so far it seems like he's respected. We have a legislature which the governor has a lot of influence over in terms of doing it. And so if somebody really gets out there and writes a plan in terms of regulations and all that, it seems like the political potential is there.
So right now we just have to read the bills and weep and write the check and hope that our insurance commissioner is right. That if we make it friendlier, they will come, because that's really, you know,
That's
about
about the
the only
best
thing
hope
right
right
now. Okay. All right. All great news, guys. Thanks. But it has been an interesting conversation. It's a real issue. It's a real problem, and all we can do is sort of all work together and try to get it solved. All right, guys. Thanks a lot for being here, and thank you all for watching. We'll see you again next week for Informed Sources with some better news, we hope. Have a good evening.
Informed Sources is made possible in part by Susie and Pierre G. Villery.
Public television is our passion. With so much content that WYES broadcasts and presents online, we are quite entertained and highly informed.
Please join us in supporting WYES.
This program is brought to you in part by the Eugenie and Joseph Jones Family Foundation, a local foundation proud to support education, the arts, and culture in the greater New Orleans area.